Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 17th of November. I'm Daniel Lam, your host for the podcast. After pulling back from its highs, where it tested the 3,900 support level, gold has been rebounding as the DXY retreated from the 100 mark. Now, it is not so much about the rising expectations of further Fed policy easing. In fact, the recent hawkish Fed speak has led to the powering back of the expectations of the Fed rate cut in December this year. The structural drivers, such as the questioning of Fed independence and investors' search for alternatives to fiat currencies, are all supportive factors for medium-term uptrend in gold. Now, the latest World Gold Council data for the third quarter of 2025 confirms that not only exchange-traded products inflows accelerated in the third quarter, but central bank buying also did not soften, as the monthly reported data implied, and exceeded expectations. So this dispels the excessive concerns about the slowing down of central bank buying. Now, this has been a key question from investors because many are concerned whether central banks would be rebalancing reserves at these higher gold prices. So there are a few camps here. Some of the central banks will be holding gold at the acquisition value, and they do not get concerned about market fluctuations. Some other central banks run optimization models that are dynamic and allow for over and under allocation. And others have a history of constant rebalancing and therefore not very likely to be changing strategy. So far, there's no trend of the slowing down in central bank demand. Yes, the volume of central bank buying did slow in the first half of this year, but accelerating exchange-traded products flows took up as the key growth driver in the gold demand. Now, a wide range of central banks continue to be adding to their reserves. For example, a number of new central banks are emerging as active buyers of gold, such as Brazil and Kazakhstan. Poland remains the largest buyer year to date, adding 67 tons and closing in on its 30% target. Early October data releases show China added 0.9 tons for a 12 straight month. We maintain our 3 and 12-month targets of gold at 4,300 and 4,500 respectively, and will be adding towards support within the 4,000 to the 4,050 region. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.